So I'm David McElroy with First Fusion Capital. We formed the company in 2016 to go both into commercial lending as well as to expand our horizons internationally. We went through a number of years of hard work to find viable platforms, and we're now there. So in this phase, we're expanding our referral network and we're looking for viable projects to take to the platform for funding. Today, we can talk about a general overview of the types of funding that are available. We look at ourselves as a capital multiplier platform. So rather than being someone that would be raising seed equity, we can take equity or cash or assets that a business already has, and we can grow those to the next level. A very common practice for us right now in the world where we have had a tightening up of limited partner equity. We have real estate developers coming to us who have raised maybe 20% of what they need in equity, and we can take that equity they've raised, and through our programs, we can multiply that equity so that they now have enough to, if they wish, get a traditional loan, or we can actually generate enough revenue so that they can skip the loan process. But that's for greater depth than what we're talking about. So at this point, our introductory calls, you get a sense of one another, pose questions and ideas, and then discuss in a general sense how we might proceed. What was mentioned earlier about a call with the platform is very useful at the right stage, since the founder of the platform is so well versed, having taken 8 or 9 years of putting all the connections together. They can listen to a description of what's trying to be accomplished and say, oh, well, in that case, here's what I'd recommend. So with that in mind, let's talk about the specific project we're considering today.
Justin, do you want to jump in, or do you want me to take that?
If you're comfortable talking, go for it. Otherwise, I can cover wherever needed.
So let me just try to give you, David, a quick overview of the project. Right now, we have been working on this for quite some time, looking for a large parcel of land, and then building upon that land a 35-acre lifestyle and leisure park that's anchored by a 12-acre surf lagoon. The totality of the investment would be in the $116 million range, as we have been pursuing both land as well as the funding for that. We're very close on securing the agreement on the land. Those conversations have been happening for quite some time, and we've had some conversations with other different funding options. Justin has been pursuing those for quite some time, but and most recently with Paul and his team talking through potential. So that is the amount that we're looking to raise, and how we get there, we're flexible on what that looks like. Ideally, something that mitigates our dilution as we're looking to raise that is certainly one of the factors that we're looking at. And one of the things that's also, I think, relevant is the ability to have the land and have the land construction ready. We still have some time. We're here in Florida, and it takes some time to get through entitlement process, permitting, and things like that. So that's probably call it a 12 to 18 month process before we would be what you would call shovel ready. Paul started using a new term I hadn't heard before called oven ready. So I think we would be looking at that time frame before we are at that point. So our conversations right now are to kind of share what the project's all about, and I can get into a lot more detail, but I think that's an overview. Justin, do you have anything that you would add to that? Am I missing any?
No, I think to just place it into a timeline perspective, David, Paul, and Alex Paul and Alex, you guys know this. We've talked about this. Yeah. For you, David, there's really 2 phases to this project that Tony kind of outlined, and that is the initial phase of closing on a lot of the soft costs and the acquisition of the land. We call that kind of the first 16 months of the project. And then the actual development of the project, which starts in months 16 to 18 from today's standpoint. And the way that that cost projects out is the first, call it 16-month cost is roughly, what did we ballpark, Tony? $3 million?
Yeah, that's correct.
And then after that period of time for phase two is where a majority of the capital is necessary. So that's kind of the way we're working through this project right now.
So there's plenty of time. If we look at our basic product, the capital multiplier, where an investor or group has already raised, let's say, $1.2 million of their overall need, we can deposit that with one of our private banks and turn that into a $4 million net line of credit. What many of our borrowers or companies or owners do is they take that $4 million and bring it to another phase in our program choices. One where you can have courtesy deposits placed with the same institution, which will increase the amount of loan you can get. Example, a developer I'm working with put up $1.2 million. The $1 million was the deposit. The $200,000 was to insure the deposit against loss. In his case, it happened very quickly, less than a month, but we suggest to allow 60 days. He got his $4 million net of our fees. He took that $4 million and borrowed or rented courtesy deposits. When I say rented, they don't go in his name or his company's name. They stay in the name of the investment group in the same institution. And that took his new loan up to $54 million. And then he's done another step with that $54 million because he wanted to develop a sinking fund through another investment group that would pay it off over time. That third step, depending upon what you guys are trying to accomplish, may not be what you're looking for. There may be some other trading programs that would increase the loan size available to you to accomplish the various stages of your funding.
Can we back up on that a little bit, David? So as I follow it, and it's helpful for us to just repeat this back and make sure that we're crystal.
Please.
So the way the process would operate, and I'm just thinking procedurally right now, not necessarily risk approach. I want to talk about that as well, but procedurally, $1.2 million goes into the account. $1 million is secured. 200,000 is used to essentially insure that deposit.
Yes.
Of $1 million. Is there a product that's put in place for that insurance, or what? Is there anything around that?
Yeah, it is an insurance product.
Okay, so is that kind of, as we were talking with Paul and Alex on some previous issues, is that more of a surety bond, or what is that insures the $1 million? Should
the deposit disappear for any reason, in the unlikely event such a thing could occur, the insurer steps in and gives those funds to the depositor, because those funds are in the company's name. So whatever your entity would be, that deposit, just like any bank, would be in the name of your entity as a deposit in that institution.
Okay, and is that deposit just in a money market account? Is that in a checking account? What does that deposit reside in?
Yeah, it would be like a CD account, long-term deposit account.
Okay. So that is the initial stage to get essentially what we're talking about here is call it a 4X multiple.
Yes.
The next step after that is where I'm going to need some clarification. So if you were to take that 4X and continue to build on that, can you walk us through that process a little bit again?
Yes. What the lender is willing to do is, based on deposits that come into their institution, give additional loans, not with that deposit as collateral, but as you know, in fractional reserve banking, deposits placed in a bank allows the bank to make more loans, and they're in the business of making loans and getting the spread on those loans. So my client in this example paid a fee of 7% of face value to have deposits placed in that same institution where he got his original loan. And that same institution then agreed to give him a $54 million loan. Now, in his case, he's a real estate developer, multifamily. So he's put up real estate projects with value in excess of that $54 million as collateral for that loan. So it's not loans against thin air. You need to have projects, but of course, you guys have projects, right? So I bring up the real estate example because there'd be some similarities there.
Okay, so in this case, the real estate that Tony is acquiring would be what we would essentially place as our insurance basis against that larger loan.
Your collateral against the loan. Yes, that would be correct.
And what is the multiple that is seen? How do you get to a specific number on what is available to?
In this particular case, the $4 million was given to the investment group for them to deposit about $71 million worth of courtesy deposits in the lending institution in question. And the lending institution in question then advanced to my borrower against the real estate collateral an additional $54 million loan. Keep in mind the $71 million of CDs is not collateral for the loan. It's in the name of the investors, just a courtesy deposit in the institution, allowing the institution to do additional lending in addition to what they lent my borrower.
I think I'm with you. And Tony, if you have questions, feel free to chime in.
I think, David, it's important to mention that in that example you gave, they used some of the funds from the 54 million loan to repay the multiplier loan of 5 million.
Yeah, in my client's case, just to give you an example, this is like a box of Legos. What he chose is there is an international currency trading platform in Hong Kong that is reputable. He's met a number of people that have used them that's been netting to their clients significant monthly returns. So he's taking half of the 54 million, putting it in that platform. The revenues off that platform are paying off both the first loan and the second loan over about a 24-month period of time. That worked nicely for him. He wanted to be able to have those retired. In addition, he didn't want his individual real estate projects to be collateral. So what he actually put up was the stock in his corporation. He's very successful. He's a third generation company. So the stock in their corporation has substantial value, which allowed him then to get underlying institutional loans on the multifamily projects that he's doing. What I'm sharing this with is not that you would do this same thing, but just the flexibility that's available to solve for your particular financial solution.
I think, David, what I'm alluding to is that if you have the 54 million loan and you don't go down the route of the Forex option, you could use some of that money to repay the first loan of 4 or 5 million.
Yeah, in fact, if we go a step earlier than that, I've had some borrowers get an investor to put up the 1.2 million so they could get the multiplier and then pay the investor back the 1.2 million they put up. So the investor's out of the deal with proceeds they got out of the $4 million net, and then did some other things with the remaining funds there.
Yeah.
Okay. So there's clearly flexibility. We need to understand some other aspects of it. And is there a diagram or a visual that we can see around this process, David, that we can take and kind of work backwards through?
I could give you, for another client, I wrote a narrative that outlined what I just described for you.
That'd be
is
great.
something that they could have refer back to and then ask questions of me about that.
That would be great.
One of the things I found that's very useful for those that are raising capital. In my case, I know a lot of people in the multifamily real estate development business, and they're always raising limited partner capital, always. And so they were able to go to their limited partners and say, listen, what we really need is a bridge loan. So if you'll lend us $1.2 million for 90 days, we'll pay it back, and then you'll have your money back, and we'll still give you a piece of the long-term project, which allowed them to retain a larger percentage of ownership since their investors only in for 90 days instead of for 4 or 5 years, 7 years, whatever the life of the project would be.
That's fair. Yeah, the narrative would be extremely helpful.
Yeah.
Also, so just kind of moving through the process. And Tony, if there's things that you want to dive into a little bit further, jump in anytime. I'm going to keep moving forward through this though. In terms of, I guess 2 things I want to dive into is, one is the risk. Where's the risk of the 1 million in there? And what's the payback timeline? Is there a kind of grace period or a moratorium, or are payments due starting in month 1?
It's a 24-month 0 interest loan.
I think it's important to understand, Justin, that there's a fixed fee of 20% costs of the multiplier, David.
Yes, if you the gross number of the multiplier is 5. The platform and the lending institution keeps 20% of that, or gets 20% of that. So technically speaking, if you looked at a 2-year loan with a 0 coupon, if you want to determine the cost of funds, if you paid $1 million for that 2-year loan, technically speaking, it's about a 10% per year.
And that comes out of the funding, right?
Yes. The platform splits with the providing lender that $1 million fee in this example.
Okay, so that comes out of the funding. There's no payments for 24 months, and then a balloon at the end of that 24 months.
Correct.
So theoretically speaking, given Tony's situation, we could secure this financing for the first 15 months and then look to take out that loan with the, oh, we lost Tony. He'll pick back up and I can fill him in around the edges of this.
And we'll have the recording.
Yeah, correct. So don't say anything bad about him. So as we would look to process this, I think, you know, we could do phase 1 based on the capital that he has from investors right now. Secure that. And then to your point earlier, Alex, we could pay off the original note,
Yeah.
17 or 18, moving into this larger collateral opportunity and secure that for 24 months. Is that also a 24-month 0 interest process, David?
No, there would be payments on the second piece, depending on the particular deal. So if we went to the $54 million example, there are payments on that. And the term
is there an interest-only period available?
on the second one, no, it's more of a more traditional loan. And the exact terms, of course, vary depending on the borrower and the project and the risk.
Okay. That makes it a little more difficult from a development standpoint because there is no operating capacity at that point in time.
What I would do is look at it like a construction loan where you set aside reserves in the loan itself to cover the period of time where there's no revenues.
Oh, so they would allow a larger amount to use towards interest reserves out of that loan.
Yeah, like a more traditional construction loan would have.
Okay, okay, that's helpful. So we would just need to build that into it.
Yes.
And the pricing structure is the same on that piece as it would be on the initial 4X.
When you say pricing structure, to what do you refer?
Excuse me. The 20% payment upfront from funding.
Well, in that example, my client did the courtesy deposits. So the fee that he paid for that $71 million was 7% of the face value of those deposits. And the platform with their investors takes a portion of that 7% for the platform, and a portion of it goes to the investors. Plus, of course, at the institution, there's a coupon on those deposits, those CDs, shall we say, whatever that happens to be.
So
5%.
what I think what Justin's asking is, what are the finance costs of that 54 million?
It would be the 7% of the face value of those deposits.
No interest? What about the interest?
Well, it's since if you were the investor and you were putting the CDs in the bank.
So are they offsetting the coupon for the deposits against the cost of the 54 million?
Well, there's three parts of this. The investor puts up the deposits. The investor and the platform get a 7% fee at time of closing.
Understand that.
The investor also gets, let's pretend there's a 5% CD rate at the bank. The investor also gets that 5%. So that's their return. As far as the terms of the 54 million, that's going to vary depending on the borrower, the project, and the risk.
Yeah. So there will be perhaps an arrangement fee. There will be a margin over prime rate.
Yes.
Yeah.
Okay. I think the narrative.
Justin, hey, Justin.
Yeah.
I just want to make sure. I think what I'm understanding here is there's fairly clear path to the first 5 million. Once you then go to the institution, that's going to be project specific. So what we're hearing is one example of how that went at the larger loan amount of 50 million.
Yeah.
But that could vary depending on how we set it up with the institution. There could be multiple paths there.
Yeah.
Do I have that right?
That is correct. In fact, to give you another example, I have another client that wanted to go with just one phase for their funding. They had 1.6 million that they put into a trading platform that trades standby letters of credit, midterm notes, and other financial instruments. And over a 120-day period of time, it's their goal to end up netting to their group about $15 million. So in that example, there is no loan that exists. They put up their deposit of 1.6 million. They're sharing in the revenues of that trading platform, which is projected to net them $15 million over a 4-month period of time. They're in the merger and acquisitions business and wanted a different type of solution.
Okay.
And some of those are going to come with more inherent risk than others, right? When
Yes.
you start to get into those kind of other trading platforms, obviously you're taking on significantly more risk. And I think for us, just for
I think Tony's freezing up on us, but I know where he's going with it now, which is, can we dive into the risks of some of this? I mean, we're putting $1 million into an account. What's the...
Yeah, I would say the risk on the insured deposit, short of World War or COVID or something causing delays,
project mitigating solutions,
really none.
But these are all going to trading platforms, so there's...
Well, not if you just if we just talk about the multiplier, we'll call it the Forex net.
Yeah.
There is no risk there. It's a straight deposit. You get a loan that's a multiple of that deposit with a project that warrants being able to stand up for that in terms of the quality of project that it is. So it's very simple, very much like what we're used to in more traditional banking.
Got it.
Everything else gets more complex with higher yields.
Okay.
And
Alex,
keep in mind, we're talking theory here. By the time a client is moving to the consulting phase and then defines what they want, then of course there's attorneys and compliance and all the vetting that everybody wants to make sure that it's a viable transaction. Then there's contracts issued along with joint venture agreements. So there's many steps in the more complex pieces that you'd have all your appropriate parties involved in doing the diligence with you and for you.
And the institutions that are working within this specific area, do we have purview as to who they are, and are they
Yeah, once you get in talking with the platform and a non-disclosure is signed by all parties, and you determine what types of things you'd want to do, then introductions to the appropriate parties would be brought to the table and moving forward with each individual group. There's a group out of Hong Kong that does the currency trading. At the right time, you would meet them, talk with them prior to any money changing hands or going anywhere. There are CEOs of private banks all over the world. I'm liking one that's in Canada now because I've got a number of developers in Canada, and the proximity to their country makes it nice for them. There are also CEOs of banks in South America, other parts of the globe. The Canadian bank right now, we're just liking their flexibility.
Yeah. And what type of time frame is around this process?
If we look at the multiplier, they marketed at a 90-day. My client turned his in 2 weeks. I refer to it as let's plan on 60 days. Stage 2, where he went to the 54 million, that's a 120-day process for him. And he started that. He'll probably end up funding really in 90 days because it'll be funding for him in January, that second piece.
Yeah. We have time to work through that.
Yeah, your time frame is much longer than most. You're planning way ahead. What's difficult for me is somebody comes and needs something done in 30 days, and none of our processes are really set up for that.
Right. That's fair. Yeah.
Which I think is important for us, because I think that you know, I'd rather move at a more measured pace to have a firm understanding, because this is you know, alternative and a little bit more complex, as Paul had shared early on. And so just want to make sure that we understand that and have the right information that you alluded to this, I think, earlier, in terms of having information that I can share with potential investors, so that they understand either an exit on their money or a pathway to how this project's actually going to get built. And I think that's one of the most important things, is I continue to talk to and build investment dollars and add them into what we already have, is they really want to understand, well, how are we going to have a pathway to getting the funding necessary to get this done? Or how can I get taken out of this early on? So when we were talking about, you know, the $1 million that comes in from an investor, if they've got an easy exit strategy as a bridge loan, you know, that's certainly helpful. But probably for most of the people I'm talking to is, well, we want to make sure this project gets funded before we throw our money in. So I think understanding the landscape of how that happens is, you know, for me, one of the important components to this. So I'm glad that we have a little bit more time to understand this. And I'm going to have to jump off the call here. Justin, please feel free to continue to you know, ask questions, and we can get back together after this. And I understand that we're also, David, this is an introductory call. And so for us to get more detailed information, there's another step in which a lot of that starts to unlock.
Yeah, ultimately, we end up with multiple steps, right? From me to the platform, from the platform to the individual providers, then, of course, all the attorneys along the way that all parties have that are involved.
Right. Okay, well, I apologize.
I think we really covered what we needed for what we'll call an introductory call. I think we've made some good progress there.
What do you see as appropriate next steps typically in your process, David?
What I like to see, let's say we're talking about the multiplier to start with. What I like to see is verification of the 1.2 million that would go into the multiplier, the project that would be funded with that money, the phase that we'd be funding, and then a longer term overview of what next steps the project would have. Because ultimately what we all want a viable project that generates revenues, so all investors and lenders get paid back from those revenues.
Yep.
Great. All right, I'm going to have to jump, guys. Thank you very much for your time, and I appreciate it. And I'll look forward to catching up here sometime soon.
Nice to meet you, Tony.
Thanks, Tony.
Yep, you too, David. Thank you.
I think when we're talking next steps, Justin, I think the next step would be to have that consultancy call and have the non-disclosure agreement signed, and then you get more detail around the narrative that you've asked for.
In fact, in mentioning that, I've had us go into the consulting call saying, here's what we think we want to do. And after the consulting call, the borrower decided, oh, well, now that I understand that, here's the direction I'd like to head. So the path can change depending upon how the client feels after the consulting call. The cost of the consulting call is peanuts. It's like under $300 for a 45-minute call with the gentleman that founded the platform, and he'll give you that $300 back as a credit toward whatever deal you first fund with him.
Got it. And this is the multiplier platform we're talking about.
Yeah, all of what we discussed today is the same platform. The multiplier is the lead product I use because it's easy to understand, easy to explain, and it has zero risk to be perceived or achieved.
Got it. And do you work alongside this platform, David? Is that your connection with
Yeah,
this?
they're the only platform I bring clients in for.
Okay. Got it. Okay. Yeah, I think
Correct me if I'm
makes
wrong,
sense.
David, but for Justin, what that consultancy process will do will give you that map, and as David's saying, maybe some options around that and different scenarios, but give you the map that you're trying to build, which Tony can then take to present to the other investors that are coming on board.
Yep. And I think where we have to get our heads around, obviously the multiplier makes a lot of sense, and that's easy to explain to investors. But where investors are going to have questions is, what's the exit from that point? That gets us to kind of, as you would say, Paul, oven ready approach, but what's the true development approach? And that's the area that we're going to need to really gain a much better.
That's what you would work through in this consultancy process.
Okay.
You'll work that through in more detail. David has given us an overview of what those instruments look like. Now we need to work those things, and which of those instruments come in where and when, over what time scales. And obviously you can almost sort of work back to work out what your starting point would need to be, whether Tony can fumble this through from his 1.2 that he's got, or whether there's a better starting point at 3 or 5 or whatever.
Fair. Okay.
In fact, once you have your financial path figured out after the consulting call, then maybe you have a presentation deck for your investors that says, here's the steps in our funding. Here's what we're looking for from you. Very clear, very straightforward. As you probably know, when you're talking to people about putting their money in, they don't want to hear about flexible options of what you might do at some time in the future if the stars align. That doesn't really bring money in. They need to see something much more straightforward than that.
Hypotheticals do not help us in this case.
No, you're not going to raise money with that. No.
Okay. Yeah, I think that that makes sense to move forward with that process. You guys feel free to let us know what availability there is. I think Tony would prefer to probably jump in and better understand this by next week if we could, as he's actively talking to his investor base. I mean, that's where he's leading us right now, is to go talk to a number of institutional investors about the capital that they have soft committed or soft circled to him already. So the sooner the better to just stay on top of these conversations would be best. And
I might also say, it could be 10 million in the multiplier, right? It doesn't have to be $1 million too, but if we have some way of verifying those funds would be available under appropriate circumstances, that works for us when we set up our call. What they're trying to avoid doing is talking to groups that are daydreaming, and the possibility of it turning into business is the same as not having a hangover after you're done drinking. It's trying to simplify things, which is why they threw in the consulting call. They got rid of a lot of people that even putting up $300 was above their limits of tolerance. It really cut down on the nuisance calls.
No, I think that makes sense. We're fine to go forward with that. Tony's, I mean, in the rare instance that he wouldn't even be able to bring in additional investors, he's got the capital himself to.
Yeah, so I'd say we go with the multiplier deck, right? Here's phase 1, the multiplier. Here's what we would do with that. Here's what the collateral would be to pay that back. And then we can go from there after the call to however you and your group decide you want to proceed.
Say that again for the consultancy call.
Yeah, I would give them a deck that they can look at so they have an idea of how to help you plan. So if you have an
Nice.
investment deck, even one that you already got existing, and then I'll couch it by saying, hey, we're just looking at, I explained to them what our Canadian investor did. They like the multiplier. They're uncertain about the next steps they might be interested in taking. They'll probably know better after the call. Then I'll give that to them along with the verification of funds in whatever form that is, so we can get on their call agenda.
Certainly. Alex, Paul, are you guys happy to, can you provide that info to David, or should we?
Yeah,
I assume he'd already had. it.
yeah,
Yep, no
yeah.
problem at all.
Happy to do that.
Well, excellent. So we made some good
Just so,
pre-holiday progress.
Yeah, I think you've already seen a presentation deck, David,
Okay.
and you've also, you know, proof of funds. So
Then I'll go back and pull that for this project.
if you pull that out and send it on to the founder, and
I will do it. And
give us
then
a-
should I send the link to book the consulting appointment to you, and then you'll get it, put all email addresses in of whoever's going to be
send it
invited?
to me, and Paul and I will distribute the link.
Perfect. Well, gentlemen,
and just to sort of put that into just the last context, we're repeating this call in 5 hours' time with a guy from Australia, David, who's very well connected with Tony. So in fact, Justin is in the middle of this, looking at both of those. The projects are doing the same thing. They've both got different financials. They're both got a different position in terms of project readiness. And the second call we're having, that's one that is oven ready.
Oh, I got it.
So it'll be interesting that both of those can work through this consultancy process, and they'll both reference with each other. They both, they work together, the two sponsors. So
and that really accelerates once you and your group have done one project. Project 2, 3, 4, and 5 become much easier, both because you have confidence, you have deeper understanding, and your clients can talk to one another within the confines of the non-disclosure, right? To say, yeah, what helped me with my Canadian, I had a huge deal come into me, just happened to be from Canada. They talked to each other. They all knew the same people. Well, that jumped my credibility with the second group right off the charts. That was just luck, just pure luck.
the people we're talking to in 5 hours' time, they are the technology provider to the project that we're talking about here in Florida. So they're sort of the hinge pin for all of this. So
Yeah, they own the franchise that Tony is a leasee in. So they founded it. They're setting up all of these locations all over the globe. A lot of their people in Tony's position are first movers. So there is no real proof of concept per se, which is what has been a hindrance from an equity investment perspective for a lot of these individuals. The one that we talked to in 5 hours, Aaron, is the founder and creator of this. So he's already built his lagoon. He's already built the surf park. His project is up and operational, but he built it more as a test facility. And now he wants to convert that facility into a commercial space where it can be more of a retail establishment. So that's where he's looking for the funding for this. And he has the capital in place. He just brought in $5 million worth of investors for a portion of a project. And he's talking about adding another 2 million to that, to the stack to build this off of. And his total need for his project is, call it 50 to 60 million on this one.
Excellent. Well, I'll look forward to that call as well.
Yeah.
Thank you. I will forward a copy of this to you, Alex, and you can give a copy of this recording to all parties involved.
Yeah.
Sure. Okay. Thank you.
Talk to you soon.
Thank you guys.
thanks very much. Thank you.
Thank you. Bye-bye. Bye.